So the House of Republicans this past Monday night voted to repeal the nearly $80 million that the Democratic Party had pledged to go to the IRS for funding and financial allocation. Now, the Republicans are slashing this, and I'll tell you guys that the Democratic Senate is saying no go. They're not supporting it. The IRS states that they need the funding for payroll, for back taxes, and all of this labor-funded goods and services. Now, I'll tell you that when the IRS was created, one of the main things was to collect taxes. And when I sit back as an entrepreneur, when I'm doing business and I'm looking at the houses we're building, the apartment complex that we're building, and I think about everything that we do to give back to the economic standpoint of cities and municipalities across the entire United States, you know, I always look at things from a political base, and I'm not a political person. And so at the end of this video, I want to explain to you guys how we utilize and leverage tax money through the means of real estate to be able to relinquish federal income taxes legally because of the developments that we actually create. But so you have a better understanding of what's happening here. The Federal Reserve was created in 1912. So in 1912, when the Federal Reserve was created, it's a non-governmental agency. It's actually non-constitutional. It's something that this video may get taken down for me telling you guys this, but if you Google it anywhere, in our Constitution, it says that our government themselves are the only ones that can print U.S. currency. But in 1912, we gave the ability to the Federal Reserve, who is run and operated by our central banks, the central banking system, the ability to go out and create the Federal Reserve. So when the Federal Reserve prints money, our central banks, they lend it to us. They lend it to our banks. They lend it to the federal government. The federal government allocates that capital. Now what happens is the federal government pays back a percentage to the Federal Reserve, and then the banks charge you guys interest on top of that. So when this whole circulation of money happens, in 1913, ironically enough, guess what? In the first year that we had to have federal income taxes implemented, the year after the Federal Reserve was implemented and started printing cash. And so in 1913, federal income taxes were produced, and that's where the IRS came into play, is to be able to govern you and I paying federal income taxes, because when the government borrows money from the Federal Reserve at, let's say, 2% or 3%, they're going to lend it to us at 4%, 5%. So they're making money on their money. But the way they pay, the federal government pays it back, is through our income taxes. So ironically enough, the Federal Reserve was created in 1912. Income taxes are implemented in 1913. Look it up historically. Just Google it. And one thing that you'll understand is that the Republican Party has been trying to get this taken out of our system for years. In fact, you guys sit back and you think about John F. Kennedy, and most people think that he was assassinated because he was Catholic. He wasn't assassinated because he was Catholic. He was assassinated because he was trying to dismantle the Federal Reserve. He wanted the printing of money and currency to go back to the federal government during the Nixon administration before. And so everything that was happening during the Nixon administration, there's a ton of politics that go in full circle. I could sit here for the next 3 hours and explain what happened historically with the presidential elections, politics, the Federal Reserve, money, taxes, the IRS, and then this video will end up getting taken down. So I'll just give you guys some nuts and bolts of this stuff so that you have a better understanding of why this is even happening, why the Republicans are going in saying, you know what, let's dismantle the IRS. And whether they're going to dismantle it or not, I don't know that that's the case, but they're definitely cutting funding, which makes the IRS very unstable as an independent governmental agency. And so they don't have enough manpower for labor and for costs of services that they need to function correctly. And so it's an attempt to dismantle the IRS. And so follow the content. What I'll do is I will help you guys keep current on what's happening as this progresses through the Republican House of Representatives. and through the Senate, the Democratic Senate, who is trying to smash the bill to reduce the $80 billion that has been allocated to the IRS. Now, the reason this is important, I promised you guys at the end of this video that I would explain to you guys how we utilize real estate to take advantage of not paying income taxes on the federal level. And so what we do is we build assets that we hold. So if you own any type of asset that's a rental property or anything that's like a commercial property that you're generating revenue from, and even if you're not generating revenue, you can depreciate that asset. You can depreciate everything but the land. The dirt behind me, you can't depreciate dirt. You can't depreciate land, but you can depreciate anything else. So the houses around me, if it's a rental house, if it's an Airbnb, arbitrage model, the owners of that property can depreciate that. If you're going out and building multifamily like we do, we depreciate the entire asset down. And there's ways that you can accelerate depreciation. So if you have a $2 million asset, you can take the land value, which might be $200,000, and depreciate $1.8 million of that asset over 5 years. And if your income is less than the asset value of depreciation, you pay no income taxes. So for sake of example, I have a $38 million apartment complex under construction, nearing completion in Phoenix. And so we sectioned off a portion of it this year that was already finished. We got what's called a cost segregation study done, and we depreciated that part of the asset so that we paid zero in federal income taxes this year, because it's one of the tax bills that is passed. Republicans and Democrats both support it because they all own real estate, and it's like a reward to developers being able to go out and build and develop and create city and development all around us. And so, ladies and gentlemen, real estate, in spite of what the Republicans and the Democrats do, real estate, long-term commercial assets that are cash producing, that you can depreciate, are the best means to legally diminish federal income taxes that run straight against your personal income taxes, provided that you set things up under an LLC and it's a pass-through entity that can do so. Now, I'm not an accountant, I'm not a CPA, nor am I an attorney. So I advise, like always, to contact your CPA, your accountants, or your attorneys that can help you structure this the right way. If you love this content, pound that thumbs up button, click and subscribe, and I look forward to seeing you next time.